Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. Okay, it's a long time I haven't uploaded any content. I don't just upload videos. I look at the actual problem a lot of traders are facing, and I have to go ahead and create solution to that. Okay, so in today's video we shall talk about a new topic: power of HTF market structure and forex synthetic market. So this is higher time frame market structure analysis. Okay, the power, like, why is either when you buy a market, when you buy a trade, it actually draw down by selling and go and hit your SL, and when you sell market, it actually draw down and go and hit your SL. So when you buy, the opposite happen. When you sell, the opposite happen. It's because you don't actually understand the market structure. You actually trade based on what you are seeing and what your mind is telling you, which is not what the market is saying, and which is not what the market is informing you. So you do the opposite of what the market is saying because you are not aware of the market structure. The market structure actually become more reasonable at higher time frame, because at that higher time frame, you as an observer, you can be able to actually see who are in control of the market, so that you act along. So in this video, I'm going to start with a kind of illustration on this theoretical part, and sharply I'm gonna start the practical part of this on the MT5 chart. And right here, we'll be on a higher time frame domain, and this time frame should be the daily time frame, the weekly time frame, and the monthly time frame. This is the 3D higher time frame. Okay, three-dimensional higher time frame. You should actually understand the participants in the market at this time frame and actually know what they want to do in the market. Very important, because this can keep you a loser for a couple of years, even to eternity, if you don't understand the higher time frame market structures, at 3D scale, the daily, the weekly, and the monthly. And so right here, let's assume in this 3D, so this is the week. Right here, we're going to get the week activated. So the day activated. So the day actually shows that the market is going up, for instance, and then the week shows that the market is going down, for instance, and the month shows that the market is going down. Now this is plus, let's say these are represented with their characteristic slopes. So this is plus S, okay, and this is minus. Now this is SD, and so we are going to label slope of the, just call it slope, that is the direction of the trend, which is the slope. So we are going to label it with G. So we have G means gradient or slope. So GW, the slope in the week, in the day. GD, the slope in the day, is positive. Then we have minus here, the slope in the week, and then we have minus here, the slope in the month. Okay. So if you run the algebraic summation of this slope, you will discover that the overall sign is likely going to be negative. Very important. Not necessarily at the point of observation. Maybe in real time, like as time goes on, it could be negative. So when you run the probability distribution analysis, you'll be able to know if actually what you think about the market is worth doing. Okay, well, this is a bit complicated to what I want to teach here, so I'm going to step down and stop going deep into this kind of stuff, so that I'll be able to actually hit the facts about this topic because these ones are more complicated subjects in future, right? So I don't want to go deep into slope analysis, their polarities, and the algebraic summation to know what is happening in the market. But what I'm gonna do here is I'm going to summarize it in a way that it is going to be so easy to use at this level of this topic. So always try to take trades, okay? When you are observing these time frames, these three higher time frame in 3Ds, okay? When you're observing this time frame, always try to make sure that the week and the month converge. Make sure that the week and the month have the same direction. Even if the day could misbehave, the day could have different direction. But make sure that the week and the month have the same direction. And then wait for support and resistance in the daily time frame to activate. So if you are looking for sell, if the week and the month are telling you sells, then go to the daily and look for a strong resistance for sell, because you can actually see that at resistance the market loses power to throw down in the buy, like on the buy side. The market cannot buy at resistance. So if a resistance is valid, the market can never buy at resistance. It rather change direction to sell, right? So if the week and the monthly are telling you buy, go to the daily and look for a strong support level. Okay, so at those support levels, the market cannot sell at a support level. That means if you buy, you will definitely make profit. So this is one of the things this topic is going to unveil. And so right here, make sure, that's the main fact, make sure the week and the months align. So that's the main point, that's the breakthrough on this topic. For this topic to really work, try to make sure the week and the month converge. It's very important. So there is no point of forcing the market to do what you want when it is not ready. So if the week and the month is not conversion, look for another asset or wait on next time. Like maybe you can wait after some months, after some days, I'm sorry, because market is volatile, both Forex and synthetic. So you don't need to be searching for opportunity like that. Like maybe you give it 2 days, 3 days, a week, then the market will reset and give you what you want, right? Yeah. So that is the theory I need to say. So right now we're going to Portugal and we get this thing down. The market is a very complex problem, and most time you will forget to do certain things in the market. You know, sometimes it's metaphysical, beyond your control. There are metaphysical aspects of trading that keep a lot of traders losing, right? But what I'm gonna do here is, I don't want to make it more metaphysical or something highly spiritual, but it's more of skill, okay? But always understand yourself. Are you the type that you forget to do certain things and that keep making you to lose money? Try to hang out with other traders so that when you are doing analysis, make sure you finalize with another trader so that the trader will detect your errors, okay? But under metaphysical aspect of trading that makes a lot of people lose money, moving average can help you to escape certain metaphysical issues. Metaphysical means this thing is beyond your brain. Your consciousness cannot be able to even know that you're actually making mistake. So moving average can help you in that, but I'm gonna elaborate that shortly as I go. Right here, try to know yourself in terms of your ability to follow your strategy. Okay, so your strategy, when you cannot deploy it, it becomes an issue to making profit, right? So right now, this topic is in its entirety a strategy. You can use this topic to make huge amounts of money, but that doesn't mean you cannot rely with our services and courses and mentorship. What I'm trying to say here is a video is a topic, right? There are multiple levels of the infinite topics to be discussed in the forex industry. So one video may not solve your problem. One video might help you to solve some, but not all. Or one video might not get you expert, like make you to be expert, but it can help. So what I'm trying to say in essence is, if you want to go deeper and deeper and become really successful, try to subscribe to our VIP services and enroll for our courses and mentorship. These things are very, very crucial. You need combined development. You need strong hands to set you up, to set like to make you stop losing money, right? That's by the way. So we are on to the practical part of this topic. I will start with volatility 75 index. So you on that faithful day or on that faithful period of time, you already want to get a signal. You want to buy. You are looking for opportunity to trade. Like you want to buy or you want to sell. You just want to make profit. But you can never make the profit if you follow the wrong direction. Direction is very, very crucial element of trading, and it's a vector element, right? That's color. So when you buy here, you lose because the market actually sold to hit your stop loss, and when you sell here, you lose because the market actually buy to hit your stop loss. When you buy here, you profit because the market bought, right? And also when you buy here, you profit because the market bought in the daily time frame. But when you buy here, you lose because the market sold maybe to hit your SR. And when you buy here, you lose because the market sold to hit your SR. So you can see a lot of problems, right? So we go to the monthly time frame. This is volatility 75. We wanna see what this market is doing, alright? Not necessarily because of past data, but I'm going to extrapolate these things in the future, right? We are going to go into the future. So if you look at this market, okay, we'll start running our analysis at structural level. So we have this turning point here, and this is a lower low. The market attack it in the month, not because of the current candle, but because of the previous monthly candle that closed above this turning point. I remember when I draw this turning point, I actually used the wicks as the thickness of the slab. Okay, as the width of the slab, I used it as the width, and so this candle close outside, and that is a sign of strong buyers taking over, right? Because a low has been violated. So a high break a low. If a high price break a low price, it shows there is a shift to the buying side in the market. And so in the week, we'll have to go to week and see what happened. So there is a pullback. Okay, so both the month and the week is showing buy, because that pullback is to create a low. Okay, so a high must create a low and a low must create a high. So we have a higher high because that high break a low, so it becomes a higher high, and so we expect a lower low to a higher low to happen, a low that will be higher. It will not be going that it will not just be going downtrend, or that is higher uptrend. And so that's what's happening here. So you'll be looking for buys in this kind of market condition. You'll be looking for buy, because the weekly and the monthly is buying. So you go to daily time frame. When you go to daily time frame, you are going to be working with other time frame at this spot. You'll be working with the 4 hours, most importantly 4 hours time frame. And what are you doing here? We are looking for a strong support if some of you are going to make massive profit because of this video, don't just be so proud of it. Why? Because there are other things I have not said yet. You are going to make money, yes, if you are using this strategy, but know it, you must subscribe to our VIP signal channels, and you must enroll for my courses and mentorship. If you are going to stay making profits for you don't make profit today and lose forever. You don't make profit this year and lose throughout the next year, like you make profit this year and you're losing for 3 years, 5 years, 10 years. You are gone in this game. So what you need to do is make sure you leverage our efforts and then add to what you are seeing on the free YouTube content. So what I'm saying here is this support level, you don't know how to actually put your stop losses. You might get the direction right, but you still lose because of wrong entries, because you don't have what it takes, you don't have that power to actually monitor the market. Okay, but we have this power. Everybody is created for a purpose. So you're a medical doctor, you can't go and become a mechanic or a kind of lecturer. If you try, so you will not be good at any of those stuff. So you have to be good at one thing, and that's why we actually motivate you to buy our services and products, despite you actually acknowledge enough, you are aware, you know, vast in your own part of trading, but that can't help a lot. You combine it with external resources, for it to make sense more. So this support should be we should be waiting for this, even if it pains you, even if it makes you fall sick. Yes, once you make that money, you'll be happy, right? So you wait for this opportunity, you buy here. When you buy here, you take your profit on a value swing. That means you are buying at a low price and you are taking your profit at a high price where the market actually have probability to go against you. So you don't want to play with your profit. So you actually want to take your profit where the market will go against you, where it has the likelihood to go against you. I hope I'm actually communicating what should help real traders, right? So what I'm just trying to say here, you don't want to lose this money. So you enter this trade here. Maybe you bought one lot size, because I know real traders want to risk it when the opportunity is right, and that's what I thought together. I have taught you to get the right opportunity. So you are taking your trade and you are taking your profit here. This is $19,000, and you don't want to lose this money again. You don't want to lose this money when you reach there. Okay, that's the game. You don't want to lose it. So you look for the nearest reversible levels, and then you take your profit. So this is the nearest. You take your profit. If you are buying here, you are a loser. If you are buying elsewhere, you are a loser. This is the strongest support ever, because price came here and pushed high and then calm down and push high. Another support you should have considered is this one here. Okay, or another support you should have considered in the daily is this one. Okay, and right here all the opportunity have been used. So what do? You wait, you withdraw your analysis in the daily, and then you wait for those opportunities to arrive. And what am I saying? You draw your trend lines. Okay, draw your trend lines. Make sure it's touching at least 2 points, if possible 3 points, but 2 points is cool. Okay, make sure it's touching 2 points. Yeah, once it's touching 2 points, try to get the third point. But if you fail to get the third point accurate, but the 2 points is accurate, but it's failing to get the third point accurate, you are correct. Okay, you should go and learn this thing from other YouTubers, Forex YouTubers, right? Because I talk like a professional. I teach professionally, so you may not catch every stuff, but what you need to do is, when you come to mentorship level, everything will be broken down for you. So that's or at the cost level, things will be broken down for you, right? So what I'm trying to say here, you get your trend line right, draw but draw the measure trend line. Don't make your chart look so ugly. Draw the measure trend line. Just make it simple. That way you are going to succeed. Okay, so here you have this trend line, and so I've done 3 trend lines. Okay, some of these, the one of these, like each trend line represents turning level, like turning points. They can be resistance or support. So the lower trend line is a support now, and the upper trend line is resistance. So we have another resistance here. So what are we trying to do when we have turned this line? We want price to react to these lines, okay, and then we take the direction that is in line with the higher time frame, right? So right here, we are not going to be selling no matter how crazy it appears to us. We are not going to sell on this upper trend line because we want to flow with the trend. So we are going to be looking for only buys. So if we step down to a little bit or the next lower time frame, which is the 4 hours, we notice that there is probability for the price to drop to this support level here. We are not going to sell. We allow certain things to happen. There are things that should happen, and they are called trap events. You allow the trap event to happen first. You can't trade everything. Allow the trap to happen. Don't trade the trap. The trap are those movements that are against the main trend. So allow them to happen. So here, when you push here, you take your trade. Okay. When you push down to here, you take your buy. Okay. This video is taking time. I know it's gonna take time because the content is more quality driven, so it's taking time. I don't expect it to be more than 20 minutes, but I'm going to be ending this video. This is for you. This is how you should analyze market. Okay, let's try 𝒖𝑠D, and I'm going to end this video. Let's check 𝒖𝑠D because that is one of the competitive assets that are gonna make you rich too fast. If you have the skill sets and you have the capital, one thing is stop losing your capital, because the opportunity will surely come. Some traders lose their capital and they couldn't get back to trade for a couple of weeks, months, and that's bullshit, man. You should protect your capital by using proper risk management, and at this level we have formula to actually manage risk, to know the proper lot size to use and where to put your SL and whatever. And for you to have access to this, you need to be our VIP subscriber and go for our courses and mentorship. So you see this market in the month, it's just bullish and buying, right? So it's buying. You will know that it's buying because it's breaking level in the month, right? So you step down to the week. Don't fear anything. Just step down. You are an observer. Deploy the law of relativity. Okay, so you're observing the market to get the true entry, right? So you have to know you have to consider the relativistic characteristics of the market at different time frame, and know where the big moves are happening, the big movers, the big boss, the smart money, know where they are putting money in the market. So you can see that in the week we have a pullback that ended here, right? So the week closed with a rejection. That week closed with a rejection. It's a bearish week. It closed with a rejection, right? So when price fell, when the next week open and price fell to break this rejection level, then you should buy. So another, you see, every condition have a way to approach it. So this is another situation where there is a pullback in the week. The week closed bearish, and gold keep dropping down. So you have to keep quiet. You have to keep out of the market and wait how this week will finally evolve. So at the end, it came and grab liquidity at this spot. That's what's really happening. It came and grab liquidity at this spot and get rejected. And you as a trader, you have to be a pirate, monitoring when opportunity will come. So came here. So as it start rejecting the daily time frame, and then you have to take your trade. Okay. So you see that spin bar happening here, rejection. So you take your trade. You should worth a lot of pips. If you started with kind of $10, right now you risk, this is over 4,000 pips, and then you risk 200 pips, 200 pips. But you are not taking this trade at daily. So probably in the 4-hour time frame, 1-hour time frame, which should be our entry time frame, you'll be getting lower, you'll be getting lower risk. Like the risk will reduce, like the stop loss size will reduce, and the risk reward will increase. What I mean, if we step down to the 4-hour time frame, you see the reason why you should take an entry somewhere here because of that support and put your SO maybe a little bit low, and that is giving you 40 pips against 4,000 pips, so that the risk reward will pretty much be 4,000 over 40, that is 1:100. So when you risk $10, you are making $1,000. That is crazy, but you see, you are making $1,000 taking this trade. Okay, but some expert traders that understand structure, when they are seeing a profit of $500, they are going to pile up more position at strong support. They are going to buy more. So you could make up to $30,000 from $10 trading this. That's the power of higher time frame analysis. Okay, so when we preach to you on this kind of stuff, it's not that we don't have this idea before, but this is trading is a geological event. The market follow like the market follow geographical events and the astrological characteristics, like where you can't understand it once because of cyclic nature of the market, but we make this thing to be more easier for you to understand when we deploy the idea of trying to know more. Like when we start to deep into the market to know why things happen the way they happen, so we get new ideas every day. So you have to keep learning, you have to keep adapting and be flexible. If not, you will quit, and when you quit, other traders that are new will come and be showing you profits because they are seeing things different. Everybody see things different on the market. Everybody have different vision of the market at different times. So at different times, the market keep changing, keep affecting your emotion, keep affecting your belief, keep affecting your mentality, keep telling you different things. But it is our duty to actually get the real knowledge, the raw facts, and liberate you. So we go for our VIP signal channels and go for our courses and mentorship. Bye for now.